The markets today did fantastic things. Bullish breakouts everywhere I look, AMC included. I want to hop into the analysis right away. This is the daily chart. You can see big green day, just whoop, straight up. And it just kind of went straight up all day. And I thought that would be the case yesterday. And I'm going to hop into that analysis. I do want to take a moment here and compare the daily candle to the short squeeze theory chart that I have. I'm going to pull that up. So what I did is I hypothesized what a bullish breakout would look like in the beginning of my short squeeze theory, which is to say that I have some analysis that would suggest the price can run and test the downtrend, and that would lead us to $25. So far, we're on course. As you can see, I drew this bar, and I brought it up here to this level of support and resistance at around 1450. And I did that based on this horizontal level of congestion right here. And sure enough, this bar is almost a 1-to-1 comparison, which is crazy because I was guessing, but there it is. So I don't want to delete that. I'm just going to leave it over here. I'm wondering if we're not going to get this second bar. Are we going to get that second bar? It's possible. It is possible. With the volume rising as it is, implied volatility just going up and up. This is good. This looks really good. So I'm like, okay, nothing can go that well, right? Like there's no way we're going to see this thing pop up to $18 next week on Tuesday. Are we? And I say that in that way because this, let's see here. There was a double bottom back here too. You can see this low came in around 1340. We had another low at 1416. And when you calculated a double bottom, the price target was up here towards 34. And look how quickly the price ran to that target. It went straight up, and we can get these really big days in AMC. It can happen. So if on Tuesday we get this bar, I'm just going to be like beside myself. I'm just going to go nuts. I'm also going to make a lot of money. It is Friday, so I do want to talk about my day trades. And I'll pull them up on the 1-minute chart. I guess what I just want to say is I started the week with $139 and I'm ending with $234. And outside of that cash, I have a June 17th $50 call and two June 3rd $35 calls. Those are deep out of the money contracts that don't expire, this week. But one does expire next week. And those are simply to catch any explosive upside that we might have because AMC tends to do that. Now, these options, because they are so far out of the money, aren't likely to make me money unless something exceptional happens. So the cost of these options has already been accounted for as a loss in my cash. So that whatever 150%, 100% gain I have over the week, it excludes the cost of those contracts. So that's how I want to start this video. It's not going to be a short video, and I'm not even going to apologize for it because today was so cool, and what's going on in this uptrend is so cool, and I want to talk about it. So I'm going to zoom out a little bit here. I'm on the 1-minute chart now, and I'm going to change my drawing set. I'm just going to pull up a drawing board here. That's what I'm calling this blank board. Okay. Wow. This is huge. This is huge. So we had this incredible run on Wednesday. And then on Thursday, we had this consolidation. And I was talking about this as if it was a half staff formation. So the first thing I want to do is draw that flag. And it's a flag, not a triangle, but it could be a pennant, right? It just depends how you want to look at it, okay? I'm going to draw that line and just duplicate it and pull it down. And this is why I say it could be a flag or a pennant, because these trend lines are parallel and we do have enough touches to call it a flag. And the flag is inherently a channel. And in a channel, when you have the price decline and not reach the lower extremity or the lower boundary, that is a partial decline. And that's a bullish thing. And here we saw it break out to the upside. Now, you could also call this a pennant because there is a level of horizontal support and resistance that created that partial decline. This is where I get a little finicky about chart patterns, because if you do have short patterns on the 1-minute chart, the intraday charts, they could be flags or pennants or channels, rectangles. It's really hard to say. And that's why I wanted to identify this as a half staff formation more than anything else. And maybe I should even just pull it up on Bulkowski's webpage here, thepatternsight.com, which I have pulled above me. I'm going to, let's see, can I scroll over to, Can I scroll over to the search bar? There we go. I'm going to search half staff formation. Half staff formation. Bulkowski on flags. Yeah, that'll do the trick. He explains half staff formations here. And here we go. He says, sometimes the flag will appear midway the price trend. The half staff figure to the right shows an example. And he's talking about this here. You see move A and then move B are of equal height, and they're only separated by this flag. And this is a half staff. And my experience has been that these can appear in different kinds of consolidation patterns. All that matters is that you have a powerful push, a corrective phase or a small decline, and then a big push up. You could also analyze this as a measured move up, or this could be part of a larger pattern. It's all about pattern sequencing and fractals, and that's what I've come to learn. But overall, the trend is the most important thing. So here we have this half staff formation in the middle of an uptrend. So I'm going to go ahead and identify that uptrend. It starts back here, and I do this by taking the low and then going to the high and not piercing the price, not overlapping the price, and you get actually a pretty shallow trend line. And I think that looks really good personally. There's a little bit of overlap here between the price and the beginning of the trend, but that's okay. And my experience has been that these very, very quickly formed valleys oftentimes define the entire uptrend. And this is the case here. If I were to connect these valleys between the close of Wednesday and the open, or I'm sorry, this was Wednesday, wasn't it? The close of Tuesday and the open of Wednesday, and said, hey, this is going to be our uptrend for the rest of the week, you would have said, ha, whatever. But I knew that could be the case, and this is the truth. And you can see that there was a bounce here at the end of Thursday. Okay, so this is an uptrend. I'm going to go ahead and just get this drawn correctly. I like to use big dashed lines if they're trends that include other trends within them. So that's the point here. This is green. Big uptrends. Here we go. We're coming up, and here's our half staff formation. I'm going to take the height of this flag. I'm just going to apply it to the breakout price. So I'm just going to copy it. I'm going to, let's see here, duplicate, please, and pull it up and apply it. And did we get to our target? Yes, we did. Just about. That's uncanny, isn't it? And I could probably clean this up a little bit, maybe make this a little shorter, but that's the idea, is that you get these half staff formations where you have an incoming trend, a corrective pattern, a half staff formation, and then an equal move out. Perfect. Perfect. This is exactly what I was looking for yesterday, and we have it. Now, what's cool about these kinds of moves is that they tend to fractal. And I'm going to zoom in here onto, I believe this was Wednesday, right? Yeah. And talk about a half staff formation that appeared in here as well. Most notably, I believe, is it right here? Yeah, that's going to be a half staff formation there as well. Let's go ahead and duplicate that, pull this down, and let's just make it our flagpole be from there. This one was kind of short, but nonetheless, the price did push up to its target up here, right? And look at that. That was the price upon which the price spun until it broke out of that next half staff formation. So you have one half staff pointing to the next half staff, and this occurs more than once throughout this pattern. You could probably draw another one here. This one would be like a little pennant, right? Little tiny pennant, right? There you go. And let's just take the height of that incoming run, and let's apply it to the top of this one's breakout price, and let me guess. Are we, yeah, in the next flag? And this repeats itself over and over again. And that's really exciting because honestly, this means that we're going to be fractaling in a bullish pattern. And we ended the day with this could also be a pennant in here, another half staff formation, you know? This one would have an uptrending slope on the bottom and a horizontal level of support and resistance above. But if that's true, I mean, what's the incoming trend here? Let's take it from this funky double bottom. We could probably even go down to here because, oh yeah, guess what? This one is probably also another half staff formation right here. See what I'm doing? I'm just identifying where the price chooses to consolidate and replicating the runs. And let me guess, that one points to the next half staff formation. That's just all there is to it. We're fractaling in bull flags all through this uptrend, which is amazing. I love it. So this is our primary uptrend at the moment from that low we set, which is the very, very tip of the double bottom, the ugly double bottom. And yeah, the price is pulling away from it. So there is something here to be aware of, and it's probably true that we're gonna have to test this uptrend before seeing more upside movement. That is very likely. And coming on Tuesday, the price is gonna be very high, and yeah, sell off Tuesday morning is probably gonna happen, but I wouldn't expect it to hold. We're gonna have to see a failure of this uptrend first, which I think is actually less likely. You can see that there has been one touch, and now we have the price moving very distant from the trend line. So this also suggests to me that we're probably going to see a test of the trend. I'm going to measure the height from the trend to this last peak. I'm going to compare it to this height, and it's about the same. So we're definitely going to be coming in for a test of this uptrend early next week, and it is a short week. It is possible that we get some squeezing action because there were a ton of calls that expired in the money. And if those calls are exercised, then those shares, to the best of my understanding, need to be found on the lit markets, and that will hit. And the volume will be crazy. I mean, volume was really high today too. So basically what we have here is a fractaling bullish pattern, bull flags all over the place. I'm going to clear this drawing set off, zoom out to the 15-minute time frame, and we'll analyze this. We have, here we go, I'm just going to draw it one more time. That's the big one, the big half staff flag. I know, I'm like a broken record, but bear with me. Duplicate that. Perfect, 1, 2, and 3. And this is probably part of a bigger 1, 2, 3 move. So yeah, that test of that uptrend will be important, I think, before we see another push higher. You can just see it's just going to be like zigzags up. Now, why I zoomed out to the 15-minute was because there is an incoming downtrend that we broke, and we actually had a perfect ABC test of it and broke out to the upside. So right there. So this downtrend starts at 34. This was the big one, the last minor high we had. And per Bulkowski, you need to have a 1, 2, 3 trend reversal to really confirm a breakout and up. And here you have it, the push higher out and above that downtrend, a corrective push down, and then that third move up. In fact, I might want to bring that up over here really quick. Let me just go over here. Let's go. I wonder if he has it like 1, 2, 3. Oh, 1, 2, 3 trend change. Nice. I don't think I've actually looked at this on his webpage. I know it's in his books. So let's just have a look here. He says, alas, the method is not without flaw. You can use it on any time frame, but how much information you display on a chart may determine which trend line to draw, and that can dramatically change the trading landscape. Nevertheless, in tests I found that the method helps detect a trend change, so it adds value. He says, read my book, and I agree with that. Read the book. Oh, look at this. This is a 1, 2, and 3 trend change. And that is totally an ugly double bottom. What are the chances of that, right? So step 1, find where price closes above the down sloping trend line. Right here, check. Step 2, price tests a recent low. Okay, nice. We have a recent low. Step 3, price closes above recent high. Show that, yeah, this is it. This is perfect. Oh my goodness. It's like exactly the same, right? It's exactly the same. This is fantastic. I just can't get over how well AMC is moving through these technical patterns, and how Bulkowski's information on his webpage and his books just captures that. Obi-Wan and I are just tearing it up in the Discord. Price targets, calling the action all the time. It's going higher, it's going higher, it's going higher, and then it did, and it did, and it did. It's, oh my God. So yeah, I'm excited. I'm super excited because that's a 1, 2, 3 trend change, right? And there should be another one in here. I thought I had it identified. That's okay. Let me zoom out a little bit. Yes, there is another one. It's even bigger. It's even bigger. I'll just clear out these old drawings really quick. Yeah, I know I'm being a little repetitive, but that's because we're fractaling and showing the same patterns over and over again, and understanding how that works, I think, is very important to technical analysis. So here's a low. Draw, please. There's one. Okay, and this tested that downtrend and failed. But we set a higher low, and now we have a third move that's above here. So this signals trend reversal. And what this close above this high does is it confirms an ugly double bottom pattern, which gives us a target of 1893. And that's why I have that here. So we yesterday identified the symmetrical triangle, and I assumed a bullish breakout would occur because of this half staff formation through here. And that was very accurate. Now the price has come up and it's encountering a couple of important technical levels here. There's a couple of targets that formed those levels. I'm going to go ahead and change my time frame to the daily because that's the time frame I drew those targets on. So let's see here. When the price was initially beginning to decline through here, and I was taking a lot of heat for being a bear, a descending triangle appeared. And the target for that, I believe, was right here at 1424. Yes, descending triangle target. And then later on, after this V-top, we had an extension of that V-top in the form of a right-angled and a broadening formation. Right-angled, descending, broadening formation. It's a rad GF. And that target was just above the descending triangle target, and it was at 1461. And so now the price has come cleanly to encounter those two levels and looks poised to pop up and start consolidating up here. And I think maybe that's best case scenario is we have a tail on Tuesday's open and maybe a little push higher. So maybe that candle is going to look something like this. Good strong green day, and then we may consolidate. And what that consolidation is going to do is it's going to create a handle on the ugly double bottom. And it's possible that there is no consolidation, that the price just continues to run, and that would be really cool. But I think it's more important that I address a more conservative analysis, and that would be this: that after the price makes a big move, it needs to pause and take its breath and just kind of waffle back and forth for a while before it makes its next move, which I'm going to assume is bullish because I've got this double bottom target up here at 1893. So there could be some chop moving into next week, and that should be expected. I do want to say, though, that this volume is spectacular because the volume on SPY, IWM, everywhere else was pretty low because of the holiday weekend, right? So this is spectacularly high volume. Part of me thinks that if you had a short position that you wanted to close before everyone else did, a holiday weekend would be a fantastic chance to do so. And maybe Tuesday, people start coming back in with short positions, and oh, you missed it. The shorts have already started closing, and then bam, yeah, squeeze time. But I don't know. So that's just what I got going in my head, right? That's my logic here is on Tuesday, I think that there's going to be some shock and awe, and we'll see how the markets respond to what happened today, because this is a big deal. This is a huge breakout. I'm going to go over to SPY now. I think I broke down that uptrend and AMC pretty thoroughly. Yeah, SPY making the move I was hoping and also confirming its double bottom as well. So this would be an Adam and Adam double bottom. I'm going to go ahead and calculate that price target really quickly. Go up here and we'll say Adam and Adam double bottom. Let's do it. I'm going to go ahead and make this price target here. I like to do this before I get on, but it's good to do it here too, I think. I have a lot of new subscribers, and that's super cool. I formulate these price targets. They're pretty easy. He says, this chart pattern is a twin bottom formation that becomes true when confirmed. That is, when the price closes above the center peak. And yeah, we got it. If you buy the stock before confirmation, the probability of price continuing lower is 48%. Wow, that's pretty high. Until confirmation, the squiggles on the chart are just that. Squiggles, not a double bottom. Yeah, squiggles. Yeah, that's the thing. Here, look at this. Chart patterns are all about squiggles. You have an incoming trend, right? And then if you just hop right back out, what do you got? You got a V. You got a V bottom. But if you don't come right back out, what do you have? Maybe you have a double bottom, right? Or what if you get more squiggles? Well, now you have a flag or maybe a wedge, right? Or a triangle. It's just about how many squiggles there are. That's really it. And then you measure the height of the squiggles, and then you multiply it by a statistical average, and you add that to the breakout price. And that's like 90% of chart pattern analysis. Not really, but kind of. Like, watch this. This is how it goes. So We have a percentage beating price target of 73%, which is really high. I'm going to measure the height of this pattern and take 73% of it and apply it to that intermediate peak to come to the price target. And Bulkowski explains that down here, called the measure rule. So I'm just going to go ahead and give this a go. And it's hard because do I start the double bottom up here or do I start it down here? Because that's a big price difference between those two levels. I like to use the most recent trend. So that would be from this intermediate high, not this high. Although I could do that too. I just think that the width of the pattern would be a little overextended. There is a way to score chart patterns based on their height and their width. And Bulkowski does provide that analysis, I think a tool on his website as well. So you can rate your pattern to see how well it performed because, of course, the shape of a pattern matters a lot. There's time frames, there's price ranges, there's Fibonacci patterns, all these things, they need to be taken into account and analyzed accordingly to really get an accurate idea what's going on. So I use the most recent incoming trend, which is going to be right here. This is the trend that was broken by the bounce for that first bottom. So that's a great spot to start. We got a high of 429.66. Let me pull up my calculator really quickly. 429.66, and I'm going to subtract the lowest low, which was on this candle at 380.54. I get a number. I'm going to multiply that by the percentage meaning price target, which I think was like 74%, 73%. I get $35, and I just add that to this intermediate high at 408.57. 408.57. What do I get? 444.42. That's a lot of fours. But that's the price target. So I'm just going to go ahead and plop that down, and we'll keep an eye on this moving into the future. I'm going to label this. This is an Adam and Adam double bottom. Let's see here. Okay, and that target was 424, something like that. 42, I don't know. That's close enough. Wow, that's higher than I thought it would be. That's way up here. That's the top of this pattern, which is a descending broadening formation or descending broadening wedge. And this is what I've been saying is if we do get a breakout of this downtrend, it's realistic to see the price reach the top of this pattern. And that is exactly what this price target is inferring. It's even inferring a breakout if that price target's reached further in the future rather than sooner. Nonetheless, we also have a really bullish pattern here on these candles. This is incredible stuff. It's just amazing. The bullish reversal is in full swing. I think it's confirmed. I think we might still have some testing to do because volume was still pretty low, right? We're going to need a big volume event, I think, to really confirm, really seal the deal. But I am very happy with what I'm seeing. I'm going to go to more patterns. Candle pick index. Yes. Bulkowski has a pattern pick index on his website, which is incredibly helpful because then you can just look at the candles and you don't have to think about it all that much. It's a little harder to read the descriptions and try to find them. And I really should have done this before. I think we're looking at like, what do you call those? Like white soldiers? 3 white soldiers. Let's go ahead and read this and see what it says because those look more bullish than that, don't they? I'm just gonna, yeah, geez. Let's see. What are our ID guidelines here? So some discussion, configuration. Look for 3 tall white candles, each with a close near the high, higher closes, and bodies that overlap. See, that's just it. We don't have bodies that overlap. This is more bullish than 3 white soldiers. Really, I think what we should be doing is analyzing these gaps, right? We have 2 gaps here. We left 2 gaps. That's incredible. Are they both breakaway gaps? Is the first a breakaway and the second an exhaustion gap? Because that would imply that this run is coming to an end already, which is probably a good way to look at the chart given that there's been so much bearish activity. Look at this. Identical 3 crows. Can I get the opposite of that? The opposite of this would be perfect. I wonder, deliberation doesn't even really quite resemble it. Not really an advanced block either. I'm going to have to look this up. It's pretty bullish. Okay, IWM. Also, doing like the exact same thing. It's like a copy and paste. See, the RSI is now making a steady move higher. Implied volatility is dropping as it was in SPY as well. That's because we're retracing the downtrends. We have an ugly double bottom confirmed here as well. So let's go ahead and calculate that price target as well, because that pattern has confirmed. Again, I would not be surprised to find handles showing up. So next week could be just like sideways grind. Everyone gets all happy, hops and all these call options. Then next week it's just sideways. And then if you're buying out of the money calls, Theta is going to wreck those options. That would seem appropriate way to catch the because there's going to be those that were really bearish and heading into those lows thinking we're going to go down, and then they flip bullish, and then oh no, it went up, and then they flip bullish, and then oh no, it goes sideways. Just trying to think of the worst case scenario for the worst trader, right? That's probably what's going to happen. So something Ron Walker says, you look up Ron Walker's YouTube. He's great. I really appreciate. He's actually the only guy I watch on YouTube for analysis. I don't watch anybody else for analysis but Ron Walker. He says that the market's designed to do the most damage. And I love that. That's a great way to think about it. Yes, the market is there to do the most damage. Because think of the reverse of that. What is the reverse of the market doing the most damage? What's damage? Taking money from you? Well, isn't your goal as a trader to take as much money from the market as you can? So aren't you trying to do as much damage? I love that perspective, because I find myself to be the most successful when I'm managing and mitigating my losses versus trying to amplify my gains. And it's all about greed and how greed's the enemy. And I say this once, I'll say it again, I'm getting a little soapboxy, but you're always trading against yourself. And that's especially true for me. And that's why I did that 5-week day trading project where I charted every trade I did, like in terms of what it did to my balance, because it really revealed to me how my trading mentality works. I took the same analysis that I use on these charts and I applied it to my own day trading chart. And when I did that, I got an objective view of me, which was terrifying. But it was a fantastic exercise. Okay, I'm getting off base here. Let's calculate the double blah 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 blah. It's hard to talk this much. Like I don't script this, obviously. Okay, so the high of 193.93, and at this point, if you're still watching, you're probably a TA nerd like I am. Congratulations. This is the smartest nerddom I think there may be. 193.93 minus a low over here of 168.90. The thing about technical analysis is this is not hard. It's not hard to punch in these numbers, right? That's all I'm doing. But I think the real skill comes into play when you have to start making decisions about what's happening in the market. Just because there's a price target on the board doesn't mean it's going to be reached. And even if it is reached, you don't know how it's going to be reached. And so how you learn to position yourself into trades to make money on those targets is really half of the battle. This is the easy part, if you ask me. Now I'm going to take that measure and I'm going to add it to this intermediate high at 182.84. What do I get? 201.86. I'm just going to copy this and let's just duplicate one that I already have down here and then edit one of them, and we'll call it ugly double bottom. Ugly double. Let's see here. And that's, oh no, caps. That's going to have to be just fine. Gonna hit copy and paste, and ooh, yeah, that's a high target. That's above whatever that line is. What is that line? What is this? Oh, that's me drawing a measured move down, I think. Yeah, this is really a downtrend. This is really a downtrend. Okay, that's what that is, based off of this high coming out of the top of that broadening bottom, which broke out bearishly, ironically enough. See, that's just it. Just because you have a pattern doesn't mean the price target is going to be reached, right? The bullish target for that pattern's up here. But actually, it broke down and reached the bearish one. Now, I still expect that this will be a technical level, but obviously it wasn't reached. At least not yet. Now we have this sweet ugly double bottom formed off of this very fractally measured move down. And we're looking for a breakout, which would be a pull back into this broadening bottom. And there's, yeah, this is looking sweet. This is looking awesome. Okay, so what was I doing again? Oh yeah. Okay, so let's get fun with the IWM. So if this price target is met for the ugly double bottom, that will constitute a breakout of this trend line. And it's going to be a pretty good breakout, the trend line breakout target, because guess what? You can calculate price targets based on trend lines too, because that's essentially what chart patterns are. It's It's basically what chart patterns are. Like when you have a right angle descending broadening formation and you're measuring the height of the pattern, you're going to go from that very top level, that horizontal support and resistance, you're going to go down to the lowest valley. And essentially what you're doing is you're taking a percentage median price target of the amplitude of a trend that's flat, at least on the top. Okay, so what was I looking up again? Oh yeah, I haven't looked this up yet. Is it on his website? Trendline mirrors? Trendline breakout? Let's just see what he got. Downtrend lines. Let's have a look here. 1, 2, 3, 4, 5. Okay, great. Use log scale. I always use log scale. Minor highs. Draw down sloping trend lines along price peaks. That way, when the trend changes from down to up, you'll know with a trend line pierce. Yeah, that's the truth. And there's also a downtrend here that we broke, right? So we're saying that we have this accelerated downtrend. That's why I refer to these downtrends that appear within downtrends, or uptrend that appears within an uptrend. And so the way I typically denote this is I make this accelerated line a thinner dashed line like that. I do that because it's less stable. In my mind, the smaller the line is, the easier it is to break. And that idea comes from the slope. So a 37-degree slope trend is going to be easier to break than a 14-degree slope. What do we got here? Spacing. Widely spaced touches, median 13 days between touches, suggesting more powerful move post-breakout. Okay, so we've been on this trend line. It's been a long time since we've had touch. So the post-breakout should be pretty decent based on the spacing. He suggests, let's see here. Whatever. Length. Long trend lines, more than the median, 48 days. Wow, is this 48 days? I'm just going to go ahead and measure this really quickly. How many days into this are we? Looks like 43 bars. So 43 days, that's not bad. Lead to more powerful rallies after the trend line pierce, 52% longer than median versus 50%. Okay, great. Slope. Shallow trend lines lead more powerful moves after the trend line pierce median slope. Okay, here we go. Let's see here. 0.05, not degrees. 56 degrees for shallow, 46 for steep. Interesting. Volume. A downward volume trend results in a more powerful rally after the trend line pierce. Okay, I mean, we had an upslope here, and then it's trending down. So I want to say, though, that that's probably not true. Looking at the average, the 30-period average volume here, it's kind of flat. That's okay, though. So, returning to Bulkowski's page here. The measure rule. Let's read it. I actually haven't read this. Like, I get my disappear. Whew. I'm back. From this book, chapter 3 in this book is fantastic. If you don't have this book, this is going to be the best 30, 60 bucks you ever spent in your life. That's not true. I mean, it could be, though. I don't know. It depends. It's made its money for me. The truth about trend lines, right there. The truth about trend lines. Are you drawing trend lines correctly? What if I told you most of the YouTubers that I watch or have seen don't know how to draw trend lines? Maybe they should read a book. Okay, downsloping trend lines. Use the measure rule to predict how far price will rise after an upward breakout, a price pierce from the trend line. The figure shows a downsloping trend line with the price breakout toward at point B. Yeah, okay, I see that. From the breakout, find the prior minor high. Okay. He shows that as A. Measure the widest distance between the 2 points. Got it. Multiply that distance by 56%. So that's the percentage median price target. So when I was showing you with the half staff formations, was a 100%. That's why I said measured move up. There's either going to be, a 50% or 100% target there. And that just depends on how you're doing the analysis. It's interesting. Once you get into it, you start to explore these patterns. It becomes very, I don't know, it just all kind of clicks, and you suddenly see charts, and you can read charts. You can read charts like you can read music. So here we go. I'm going to measure this distance here from, well, you know what I'll do? I don't need to draw anything. I can just say, hey, what's this? 100. We'll see. Where's 200 at? It's a little too high. So we'll say 198 to... I gotta write that down because I'm not gonna remember it. I'm just gonna freaking do it right here. So 198 minus, and what was this low? 169 minus 169 equals 29. And we're gonna multiply that by the percentage being price target, which would be 56%. And then we're gonna add that to the breakout price, which is a moving target because that slope has an X and a Y function. So what price should I use? How about a technical level? Why not the right angle and ascending broadening formation target? That'd be $190. I know it's tempting, like, you know, just use that price right there. But honestly, I'm thinking that we're going to see some waffling. Okay, waffling. That's what that is. That's what a waffle is. And maybe I should even go into one of Bulkowski's pages and explain that. But yeah, this is really the realistic thing to expect from the markets. It is. I know. I just wanted to see this thing go poof, explode, you know, to the moon. But honestly, probably going to consolidate. Probably going to consolidate. So if I use 190, let's see here. Go up here, plus 190. Let me get this on the screen. What's that equal? 206.24, and that's really high. 206 is right here, which is about this high. So that would come back up to here. That would be interesting, wouldn't it? Double bottom, breaks out, comes up to the target at 201, and maybe overextends a little bit and comes up to 208. See, this is good analysis. This is really good analysis. And oh, do you see what I see? Do you see what I see? I see one. Let me change this color too, because that's not great to have all that the same color. Save as default. That's going to be a 1, 2, 3 move, right? And that would be our corrective phase. And that can be a measured move up. It can be a flag. It can be a handle in a double bottom. It doesn't matter. They're all related, but you can see how that works, right? You go 1, 2, and 3. That's simple. And what's that do? That kind of gives us a shoulder, doesn't it? Maybe we can get a complex inverted head and shoulder here too. So this is the way the analysis stacks up. And when it starts stacking up like that, it's probably pretty good. So I took a good look at SPY and IWM, AMC. I didn't look at GameStop. I did notice that GameStop was red today, but I'm not super concerned about it. I haven't looked at it close up, but I bet you it's just consolidating. Yeah, let's just, this is exciting. Now, remember what I was saying about half-staff formations. Let me just get blank going here. Is there something on my blank chart? What's on my blank chart? Aha, I put a big triangle up here with a target at 415. I bet you that we're going to go touch that target. I bet you we're going to go touch that target. This is interesting. What is this? Is this like... Is that a broadening bottom? I'm gonna call that a broadening bottom. I'm doing it. At the end of that triangle, I think we had a broadening bottom. We had a downward breakout of that triangle, but the price did not fail. Now, when AMC fell out of its descending triangle, it tanked, but GameStop is holding. And now we have a bottoming pattern, and the price is bouncing off of that lower level. That's awesome. I'm going to have to calculate that price target. 1, 2, 3. You know, I'm just going to do it right now. I'm pretty confident. That looks really good. That looks really good. So let's go to the top. And I know this is a long video. I don't even care. I don't even care. Broadening. It's gonna take a long time to get up, so whatever. And I worry about that. I'm like, oh no, if I post too late, then I won't get, you know, my view count will drop, and I don't want that. Like, like it's fun watching the views go up. It is. Let's have a little look-see here. So percentage beating price target for an upward breakout is 65%. That's a generous percentage beating price target. So let's go ahead and take the high and the low here. And what's this high? It's 199.41. We're going to subtract the lowest low, which is down here at 77.58. That's 121.83. That is huge. That is huge. Okay, so I'm going to take 65% of that. Did I do that right? Sub 100, you know, and the high was like 200. So yeah, so $79. Where do I add that to? That was the question. Let me find the measure rule over here. Let's see here. Measure rule, compute the difference between the peaks, blah, 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 and blah, 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 blah. Add the height to the pattern's top. Okay, so point A. So that would be that high of 199.41 plus 199.41 is 278.59, and that's a pretty good target. We're gonna put that down. GME price targets. I haven't been analyzing GME. I really haven't. This is just me saying, hey, I have faith that this is also moving per technical analysis, which might not be popular amongst the GameStop trading crowd, but I don't care. broadening bottom. Bullish target obviously here. And it wasn't at 252, it was at like 278. That's not bad. That's not bad at all. That would be making me money at that point. I don't know what my cost basis is in GameStop. I do my best to not know what my cost basis is in GameStop. Here we go. But I think my cost basis is lower than that. So this is really good. This is really good. You can see that there's a level of horizontal support and resistance here that is very, very important. And this is just saying, hey, we're going to go back up and test that level, right? That dropping below whatever this level was, it's about $130. This was too low. Now the price is going to probably push higher. Whew. So GameStop, man, what a saga. Cool stuff. Okay, so those are the 4 big ones that I want to cover. Remember, this is just a vlog. It's me. I use Bulkowski's technical analysis. You really shouldn't be, following me all that carefully trade-wise, although I do share what all of my trades are in my Discord. If you want to watch me chart live, go ahead. There's going to be a link in the channel below. And actually, I need to show my day trades for AMC really quickly. Also because a couple people commented first and I failed to recognize them. So this is me saying, hey, I see you and I didn't forget. There we go. Maybe pause the screen if you want to see what my trades were. Old School Fool, Edward Smith. You guys were first. There you are. There's a little shout out and happy trading.